Cool. We got that going. All right, and I guess we'll just get started. If Andrew, are you in a good spot? Okay, all right. Let's share. All righty. Let's see. Cool. Well, thank you everyone for joining us. Before we get started into the nitty-gritty about how we performed our evaluation, I just want to provide a quick background about the Red Hawk Fund. Let's see, just making sure that no one's coming in. Perfect. Well, founded in 2009 with approximately $250,000 of the Seattle University endowment, we've grown and currently managing roughly $1.2 million. Our benchmark is the S&P 500 Fossil Fuel Free Index, which we've been beating on a 5-year time frame. We are directly responsible to the school, and our primary purpose is to grow the fund and provide an educational opportunity for Seattle U students. Currently, we've got 34 holdings. We're trying to trim that down even more. And then we got 18 total members of the fund. Here we have a list of all the members that contributed to this valuation. We talked about it in the intro earlier, but Eric and I are co-chairs, Harry, Thomas, and Prashantik, our portfolio managers. Nancy is our ESG specialist. Andrew and Francisco are our equity research analysts. Francisco couldn't join us today, but he did a lot of help with our investment risk. And of course, we have our faculty advisor, Professor Kathy Kao. We are recommending a hold on Weyerhaeuser stock with a price target of 41.74 based on a current price of 39.3, which represents a 6.2% upside. Our IPS dictates that any valuation within a 15% range represents a hold recommendation. Despite the hold, we think Weyerhaeuser has a lot going for it, primarily strong demand for its wood products coupled with a housing shortage, a vertically integrated business, the efficient and strategic use of assets, as well as an excellent ESG rating. And now Harry with the business overview.
So Weyerhaeuser operates as a tax-efficient real estate investment trust with 3 industry-leading businesses: timberlands, real estate, energy, and natural resources, as well as wood products. It currently owns 11 million acres in the US and manages 14 million acres licensed timberland in Canada, which makes the largest private timberland owner in North America. Weyerhaeuser also has a 35 manufacturing facilities to help achieve scale and low-cost productions. Next, Eric will talk about the industry analysis.
Thanks, Harry. So from our research, we found that Weyerhaeuser operates in 2 industries: sawmills and wood production. And also logging as well. So we just start off with sawmills and wood production, and Andrew will go over the competitive positioning side of that aspect. So starting off with the analysis, this industry is quite a large industry with 35.7 billion in annual revenue. This is a mature stage industry, and its key drivers are housing starts and value of residential constructions. Housing starts, its outlook for many analysts are a little bit wary at the moment, just due to the very high growth in 2020 and 2021. And analysts are expecting it to slow down for the next coming years. And the value of residential construction is expected to increase over the next couple of years as more people are spending more on home improvements. So overall, consistently rising household income levels and recovered corporate profit will likely buoy the industry with continued home improvement.
Right. So again, we think that the firm is well positioned to capitalize on the current market swings in residential construction from post-pandemic life, and by simply being a market leader here, irregardless of import-export risks, the low customer and product concentration will continue to be a boon to all industry players, and the maturity of the industry belies Weyerhaeuser's potential to benefit from some natural market consolidation and economies of scale stemming from deepening market saturation.
Off to the logging industry, this industry is a little bit smaller than the prior, 17.3 billion in annual revenue. And it's a mature stage industry, and we identified 2 key drivers in this industry. So price of sawmill lumber, and explained in the previous slide, value of residential constructions. So price of sawmill lumber is expected to decrease in the next couple of years just because of the normalization of pricing condition and also supply chains easing. And again, as I explained, the positive outlook for value residential construction, the last slide, and overall, the industry revenue is expected to increase at a slight rate with 0.9%, but this may be hindered with the price of sawmill lumber being very uncertain at the moment, as it has risen significantly in the past couple of months, and it is expected to decrease or remain at the same levels.
So like wood products, notably, Weyerhaeuser is a market leader here too. And despite some high exposure to pricing risks from internal business dependencies, the relative expensiveness in export pricing and the potential profits from pandemic price distortions could boon the industry as well as the firm's bottom line. This industry is mature as well. However, Weyerhaeuser is strongly positioned as it should be able to continue to leverage its large asset reserves and gain from those strong profit drivers downstream.
We built our valuation price target by combining and weighing three different models: a free cash flow to firm, a relative valuation, and a residual income model to reach a price target of 41.74, which represents a 6.4% upside based on the current share price. Harry will now explain how we calculated the cost of capital used in some of these valuation methods.
So we use the CapEx model to estimate the cost of equity of 14.4% based on the beta of 1.4. We estimate the cost of debt based on the weighted average interest rates on various debts. Given the weights of equity and debt, this gives us the WACC of 13%. We also conducted a two-way sensitivity analysis to see how the two big factors, beta and the cost of debt, affect the cost of capital. With increase in beta and the higher cost of debt, WACC accordingly increases.
In order to perform a free cash flow to firm, we first had to examine the nature of Weyerhaeuser's business segments. If we examine this chart, we can see that wood products make up a majority of Weyerhaeuser's revenue. There is a trend of wood products becoming a larger portion of total revenue from 2016 to 2021. We expect wood products to continue being a large portion of Weyerhaeuser's revenue, but also for the real estate and E&R business segment to comprise an ever-increasing share of Weyerhaeuser's revenue. We forecasted revenue by forecasting each business segment separately. To forecast each segment, we ran a multivariable linear regression to try and capture the growth of each segment. Our regressions were based on independent variables such as the CPI index, the housing price index, permits regarding housing starts, the value spent on home remodels, all to predict the revenue for the various business segments. We can observe that wood products experiences a dip in 2019, but aggressively rebounds in 2020 and 2021. We forecast this rebound as continuing very strongly through 2023, and then tapering off to a more normalized growth rate from 2024 onwards. We forecasted timberlands as having a continued constant growth, and then we forecast the revenue from the real estate and E&R to aggressively climb in the future. Our free cash flow to firm reflects a number of the trends and concepts that we just discussed on the previous slide: a dip in 2019, an aggressive COVID bump in 2020 and 2021, and a more normalized growth rate from 2024 onwards. From our free cash flow, we calculated an equity value of roughly $31 billion, which when divided by shares outstanding, gives us a target price of 42.1, which represents a 7.12% upside.
We also apply the residual income model to capture the intrinsic value of the company's equity. Based on the required return of equity 14.4%, we estimate the equity charge from the book value of equity on the balance sheet and subtract them from net income to get the residual incomes. With shares outstanding of 746 million and the total estimated value of equity 25 billion, we finally arrive at the target price of $34.40 under the residual income model.
We also included a relative valuation model with a P valuation and EV to EBITDA. These are both weighted equally, giving us a price of $46.03. So we came up with 5 competitors for Weyerhaeuser, and we took the revenue by segment to decide which company we would want to weight more than others. I will note here that PotlatchDeltic had the most similar revenue by segment, even though they have a very small market cap relative to Weyerhaeuser. So here's the multiples. As you can see, there's quite an outlier, and that's Rainier. We still included it in the valuation. We gave it a smaller weighting, and we did this to represent the REIT portion of Weyerhaeuser's revenues. And then here you can see the weightings for each of the companies. And then here's our calculations for the relative valuation model. I'll note that we use it forecasted EPS and forecasted EBITDA to get the final price target of $46.03. And these are weighted equally at 50%.
So just to reiterate, we have 3 valuation models: free cash flow, residual income, and a relative valuation weighted at 50, 20, 30 respectively for a target price of 41.74, which represents a 6.2% upside based on the current closing price today.
Yeah. Weyerhaeuser had shown steady growth as reflected in the growth margins of the company. The strong margins are a result of the efficient governance. The drop in 2018 and 2019 margins is due to 12% and 38% drop in revenue of their timberlands production. Weyerhaeuser showed a growth in revenue for 2021, managing their cost of revenue down and resulting in high growth margins. The demand for the wood products and timberlands in the market are going to be stable, and we do not expect a sharp decline soon, keeping the margin stable for the future. Next slide, please. Thank you. Weyerhaeuser's cash holding increased to $1.8 billion in 2021, a rise of 270% compared to 2020, pushing their total current assets to $3.2 billion. The sudden change in 2018 is due to the drop in their long-term assets. The current ratio of 1.5 and the quick ratio of 1.07 is a result of highly liquid balance sheet when compared with its peers. Weyerhaeuser also aggressively spends on their capital expenditure and is expected to spend $440 million in 2022. And we forecast that the company will continue to spend at the same rate in the future to meet the demand push. Next slide, please. Weyerhaeuser has always been efficient in controlling their debts, which is evident from their decrease of debt to EBIT ratio. As of 2021, the company does not have any short-term debt. The company has also successfully decreased the long-term debt by 20% from 2017 to 2021 and stands at a better position of controlling their debts. The interest expense of the company has been low, with the debt to asset ratio of 0.39x, will allow them to take on more debts it's required for capital expansion. Can we move the next slide? Weyerhaeuser successfully manages to control their inventories, which is evident from their days inventory outstanding. The rising account payables and receivables over time contributes to a higher days payable outstanding and days sales outstanding overall, pushing the cash conversion cycle high.
And with all investments comes risk. So we identified 2 types of risk for Weyerhaeuser that it faces. First, macroeconomic risk and operational risk. So just to point out one of the points, the high volatility and fluctuations in the price of lumber. As you can see in the chart on the right, this is just a chart of the price of lumber for the past 4 or 5 years. You definitely see that has been very volatile as of late, and definitely these fluctuations can sway Weyerhaeuser's revenue significantly, so that poses a risk to the company. And off to operational risk, their businesses in Weyerhaeuser is interdependent within each other. So, for example, in 2020, when there's a lot of supply chain issues and demand issues, as Weyerhaeuser being a manufacturer and supplier, they were negatively affected by this. And compared to the peers were able to incur a slight growth just because of their focus in one segment, while Weyerhaeuser suffered a loss in 2020. And next is a possibility of significant loss from just ownership of land that are like prone to natural disasters. For example, for Weyerhaeuser has real estate in Portland, and in Portland there was a large forest fire, and that Weyerhaeuser incurred $80 million loss due to that. So definitely focusing on the strategically planning the location of each real estate or land is very important.
To better understand Weyerhaeuser climate risk exposure, we conduct an analysis on 2020 greenhouse gases inventory emission. we found out the processing of soap product emission, which is also the category 10, account for 40% of total emission. This segment also drive up the scope 3 emission as well. So we believe it requires joint efforts for Weyerhaeuser to collaborate with the buyer to cut down the carbon footprint under this segment. Weyerhaeuser can seek more energy efficiency strategy and develop more resources of renewable biomass residual. On the other hand, we saw the land acquisition had not only built a Weyerhaeuser's investment portfolio, it also scaled up its carbon removal capability. So by 2020, this capability has moved to 32 million, which we believe it kind of poses a business opportunity for Weyerhaeuser to enter the carbon trading market. And Weyerhaeuser can also help other businesses to achieve carbon negative. Move forward to social aspect. We believe the employee safetyness and wellness are the primary indicator to assess the performance under the social pillar. So we observe a decline in 2020 of health penalty. So for the future, we suggest Weyerhaeuser to keep monitor the annual incident rate and enhance the safety trainings among employees. And lastly, speaking of governance aspect, we assess the rationality of board decision making. So we dive deeper about how to understand how Weyerhaeuser make important decision. So we summarize the primary considers for acquisition, dividend growth, and share repurchase. We found there are major value driver that link to the important decision. They also link to achieve long-term value for shareholders. So in general, we saw a very responsible and rational progress of making board decision. And our recommendation under this aspect is to establish the Climate Action Committee to closely track the carbon removal for preparing future entry into the carbon trading market. Now I'm going to pass out to Joe to make final investment recommendation.
Thank you, Nancy. So just to reiterate, we are recommending a hold based on a price target of $41.74, which represents a 6.2% upside. Despite this being a hold recommendation, we do like this business. We do see some positive aspects in its future. There's a strong backlog and demand for Weyerhaeuser's products, as well as a housing supply shortage. So there will always be demand for wood products in the near future. It's a vertically integrated company, which most of its competitors are not. But there are some things to monitor if there are any changes in macroeconomic conditions regarding lumber prices, housing starts, or value of residential construction and improvements that could affect Weyerhaeuser's outlook. Thank you for joining us, and we're here to answer any questions if you have any for us.
Awesome. Thanks for the presentation. Do you want to, Andy, do you want to start off with some questions?
Yeah, first, just want to thank you guys for doing this. Can you guys hear me okay? Great. So thank you guys for doing this. I think your analysis was really good. So there's a lot of metrics in here that I'm not even tracking on the company as the director of IR. I see Kara smiling as well. So, you know, you guys obviously took a very thorough look at the company. I just want to say out of the chute, we've got 9 sell-side analysts that cover Weyerhaeuser and that have their own valuation models on the company. And the average target price across those 9 analysts is about $44. The low is 40 and the high is 50. So I think you guys are right in kind of the hunt in terms of you know, these people who do this for a living with some of the large institutional, some of the large banks. In terms of how they view our valuation. So kudos there. if you could go back to one of the early slides, I want to dissect a little bit more your thoughts on the wood products business and the timberlands business. So probably slide 6, maybe. And maybe just kind of walk us through your thoughts on so you've got a yellow on the housing starts. Just kind of walk us through your thoughts on that.
Yeah, so much of our industry analysis is conducted mainly on IBIS World. We have a large pool of analysts and research on there, but it definitely for housing starts. I think the elephant in the room is with the Fed increasing interest rates that in theory negatively affects like public investments. So we believe that for housing starts, at least in the near future, will begin to slow. We definitely seen a hot year in 2020, 2021, a lot of people purchasing houses, but that definitely has a large backlog, that definitely in the US as a whole. So for Weyerhaeuser specifically, they have a lot of demand on their way in the next coming years.
Okay, that's helpful. Yeah, I mean, if you don't mind, if you know, can we opine a little bit as well on our thoughts on some of these topics?
Oh, please.
Is that okay?
Yes,
Yeah.
absolutely.
Yeah, most definitely.
So yeah, I mean, our view on the wood product side, which is really largely tied to, you know, sort of U.S. home building and repair and remodel, is that we've got some really strong demand fundamentals that are kind of setting up or that have set up. I think as you guys have noted, we've seen about a decade of underbuilding in the U.S. We've got millennials and Generation Zs coming into their prime home buying years. Record low existing home inventory on the market. You know, individual households have expanded balance sheets. And although we are seeing an uptick in mortgage interest rates, they're still at sort of, you know, what we would call historic lows. And so from our perspective, you know, we're envisioning several years where housing demand will be, you know, should be very robust. I think on the concept of a rising mortgage interest rate, what gives us, or what would give us the most pause, is if we would see rates going up quickly over a short amount of time, right? So, I mean, I think the general perception is that they will go up. If it's a more measured increase, we think that the housing market, the home builders can absorb that. But everything we're hearing from our home builder customers today is, you know, we're less concerned about the price of lumber and OSB and engineered wood products. We're more concerned about getting the product to get the houses built because the demand is there. So we're fairly bullish on the home building segment and the repair and remodel segment over the next several years.
Yeah, just to add to that, there's some great points. We did forecast a very bullish housing demand in our business revenue segments, especially for wood products. And then when we couple this with inflationary pressures and increased prices, Weyerhaeuser comes out as the winner in those particular macroeconomic circumstances.
Yep, great. And then on the timberland side, what are you guys, you know, maybe just, so I'll go to slide 7. What are your thoughts there again? Kind of walk me through your view or outlook on the timberland segment.
Yeah, so this is, yeah, definitely in terms of like the price of sawmill lumber, that he plans on supply chains and, you know, normalization of pricing conditions. But within our research, a lot of analysts are expecting that to kind of soften up, and with prices of sawmill lumber coming down. But from our extensive research, we see that this may become like more of a new normal in terms of the price of sawmill lumber, which people are adapting to those elevated prices. But yeah, it's very uncertain at the moment. I think in the chart further down, I've highlighted how volatile the price of lumber was just in the past 1 year. So it's definitely very hard to forecast, you know, where that number will end up in the next 1 or 2 years.
Okay. I think one thing to note on the timberland side too is that, you know, timberlands are hard assets. So in an environment where you've got inflation, they can be viewed very favorably as a place for people to invest. And so what we're starting to see is a lot of non-traditional investors starting to come into the timberland space who are interested in it from an inflationary hedge perspective, but also from an ESG perspective, right? So they're viewing forests and timberlands as a way to get into the forest carbon offset market. And although that's very nascent and emerging, I think a lot of folks think that with all of these companies who are setting net zero targets with very difficult CO2 emissions to abate, forests are one of the lowest cost, kind of lowest technology solutions to get to net zero. And so I can tell you from our perspective, we've got a team built up within our Chief Development Officers organization. We call it our Natural Climate Solutions team. They're getting a lot of inbound calls on potential carbon offset deals with Weyerhaeuser to try to offset their emissions. So that's, from our perspective, we think, if you couple kind of the strong demand fundamentals on the housing side and what that will do on the wood product side, I mean, that's eventually going to translate into the forests themselves, where the logs come from to make those products. And if we get in an environment where on the voluntary side, carbon prices start to compete with saw logs or saw timber, it could create an environment where logs become a bit more scarce, and then that will elevate log prices and underlying timberlands value as well. So just some things to think about, in terms of the timberlands portfolio.
Yeah,
So
I want to
good.
add a comment about the ESG perspective, because I read through your carbon record methodology and the investor relation presentation.
Yep.
I feel this carbon removal capabilities, it could be still growing in future 5-10 years, which give other businesses who urge to meet their carbon neutral goal in short term. This is a good buffer solution by selling, carbon allowance for them. So I see a business opportunity, and warehouse can also develop a source of revenue by planting trees.
That's right. Yeah. So I mean, in our natural climate solutions business, we have 4 kind of sub businesses within that. We've got mitigation banking and conservation, which has been in the portfolio for a while in our real estate and ENR segment. We also have solar and wind leases that we get revenue from on our acreage, and that's been in the portfolio for a while too. But these new emerging areas within natural climate solutions are the forest carbon offsets. Clearly, with 11 million acres of high quality timberlands across the United States, we're a natural partner for people who are looking to abate their emissions, and that'll be a great revenue source for us over time. But I think the important thing to note on that is a lot of that will depend on the price of carbon in the voluntary market, right? So with where we're seeing carbon today at, I don't call it $10 to $20 per ton, it struggles to compete with saw logs and timber that we would harvest and send to a sawmill or export, to Asia. And so we really need to see that price start to come up to where people start making that decision. Hey, I'm going to grow for carbon versus grow for timber. But we think that will happen. We have seen an uptick in carbon prices over the last, year plus in the US. We've already seen significant increases in places like Australia and New Zealand. And so we think that's on the horizon. And so we're building up a team to be ready for that. I think one point to make, and it's nuanced within the ESG side, particularly the slide that shows the 32 million tons of removals. So the nuance with forest carbon offsets is that 32 million is not available for us to monetize. That's the carbon that is stored in our trees on an annual basis, just based on our normal business as usual operations. And how forest carbon offsets work is you essentially have to define a project area. And so for us, our first pilot project in forest carbon offsets is actually in the state of Maine. It's a fairly small project that we're going to take through the process. But you have to kind of draw a polygon around some acreage. You've got to define what that component of timberland sequesters on its own, just based on our normal business as usual conditions. And then you have to demonstrate that you're doing something different in your operations, whether it's density of planting of trees, silviculture practices, delaying harvest, to drive additional carbon sequestration from the normal business as usual conditions. And that additionality, that delta, is what's actually it's what's available to monetize. So this is a question we get a lot, and we talk to a lot of investors about. They see that big 32 million metric ton numbers and number, and they want to put a multiple on it or carbon price on it and say, wow, you guys have so much. And we do, but not all acres are going to compete with carbon, right? So I mean, we've got our Pacific Northwest timberlands in Washington and Oregon, very high quality, very premium timber. Carbon prices have to get pretty high to where we would make a decision to defer harvest or do something different in those operations versus something up in the northeastern part of the United States where log prices are a little bit lower. It's a totally different market. So we're looking across our entire landscape, and the team within our Chief Development Officers organization, you know, they're kind of building those milestones. Hey, if we see carbon prices here, this part of the portfolio now unlocks, and we can make a decision on grow for carbon or grow for timber or grow for both in any given area. So just some thoughts on that, but it's definitely something that we're interested in. We had an investor day in September where we kind of launched this new natural climate solutions business. We've got a growth target out there between kind of now and the end of 2025 to grow that from, I think it was a baseline of $22 million of EBITDA in 2020 to $100 million of EBITDA in 2025. And we don't think that's the ceiling for that business. You know, we think that's just where we've got some insight into over the next several years. But the majority of that growth long term will come from forest carbon offsets and some unique opportunities that we have in the Gulf South with carbon capture and storage.
Yeah, I learned a lot by reading your documents. And can I ask, how do you link the carbon removal to your EBITDA?
Carbon removal to EBITDA? I mean, at this point, there is no monetary value associated with that.
Okay,
So
yeah, go ahead.
Yeah, so I mean, for us, that's just the amount of CO2 that's sequestered by our trees. You know, by our standing trees and the wood products and the carbon that's stored in the wood products that we produce. In terms of actual revenue and how it translates into EBITDA, that will be through the monetization process of these carbon offset projects, through carbon capture and storage projects, and those types of things.
Okay, I see. You know, this is the first company I saw in detail monitor of Scope 3 emission. Yep. This is really impressive.
Thanks. Yeah, no, that's and we definitely view our carbon record as a peer leading disclosure. So we've got a pretty robust sustainability team here that's very involved in, you know, all of the organizations, trade associations and whatnot that are trying to build some continuity around how companies like ours report our carbon removals and emissions. And so we decided last year, hey, we've got enough insight into where these rules and regulations are going. Let's you know, we're the biggest company out there from a timberlands perspective. Let's just go ahead and take a leadership position and let's put our carbon record out there, inclusive of Scope 1, 2, and 3 removals and emissions. And we've gotten a lot of praise from our institutional investors on that. It's something that they really like to see. And then also on the same day that we announced that, on our investor day in September, we also announced our intention to set a science-based greenhouse gas reduction target in alignment with a 1.5 degree scenario. And we press released in December that has been accepted by the Science Based Target Initiative. And so those two announcements, actions have garnered a lot of interest from, I mean, we already had interest from ESG focused investors because of the business that we're in. But that kind of puts us at the top of the list in terms of the forest products and timberlands industry, in terms of just interest in companies that are leading on ESG.
Continuing on the ESG aspect, how do you guys value that in part of your portfolio, where when you look at companies, do they have to meet a certain threshold to be part of your portfolio, or is it more like if they check the boxes, we will buy them if they're a buy settings, or are they, or like we're going to hold even if it doesn't meet your valuation, we're going to buy them because of the ESG? So how do you guys navigate that when you value ESG without using a more on a qualitative or qualitative side rather than quantitative?
Yeah, I can answer that question. I developed a ESG framework that tailored to Weyerhaeuser Fund needs. As far as we list a number of key issues under each ESG pillar, and we are ready to the next step we're going to do is to educate our analysts to look at those key issues and list the top 3 that this company has greatest risk exposure. Sometimes different business nature could determine different key issues we should look at. For example, for Infotech, if we are evaluating their social aspects, we will look at data privacy. For Weyerhaeuser, we understand this business involves a lot of logging manufacture. We will look at the employee safety and management. And for next step, we're going to build up a portfolio to manage the overall carbon intensity under each sector. And we're going to adopt ESG perspective to adjusting our holdings by sell off those has intense carbon footprint and keep those who are actively manage their carbon risk. So this is next. I hope, did I answer your question?
Yep. Just curious how funds changed how they view ESG and value it.
We just established a simple framework and we're ready to make it happen.
Yeah, there's been a big push by the school to better incorporate ESG, and we wanted to do a deeper understanding of it than what was being done before. We have to, every once in a while, we got to remind analysts that governance doesn't necessarily depend on diversity on the board, right? There's a lot more to governance than just that. Nancy's taken the lead and hit it out of the park. And we're working with all sorts of faculty members, as well as having meetings with the CFO at Seattle U, and we're just slowly dialing this down. And hopefully we'll get into a one-page cheat sheet that we can hand out to our analysts so that they can apply it efficiently. That's all Nancy. That's been great.
And I would just say, so several years ago, ESG tended to be a topic that you only really spoke with European investors with or Australian investors with. Today, it's really starting to gain more prominence in the US-based institutional investors. So that dialogue has started to change. The sophistication still tends to be more leaning toward the European firms and funds, just because they've been in this for so long. But we are having a lot more conversations with our US-based investors most recently, over the last several years on ESG topics. So it's definitely becoming more mainstream here in the US, and we're actually even starting to see, typically with these sell-side institutions, you have a sell-side analyst that covers you, that knows the sector very well and covers a broad group of companies. We're seeing several of our sell-side firms actually stand up dedicated ESG research arms. They're taking, a slew of their research analysts from different sectors and saying, hey, these folks have a really good bend toward ESG. Let's have them build that arm within the sell side shop. And we're starting to see, like, our analysts. So I'll use Goldman Sachs as an example. Our analyst at Goldman Sachs is working very closely with the ESG research lead at Goldman Sachs, and they're starting to integrate both the normal equity sell side research in with the ESG research, and so that can be very powerful too for the investor, the clients of the sell side, which are our investors.
I do have a follow-up question, since this was a issue that really piqued my interest in the 10K, but I'm not sure how much you guys can talk about it. But the asset value optimization approach for the real estate, and energy and natural resources. Would it be possible at all to talk about what goes into that? How do you decide something like that? Because we think about all this land in King County, right? And like in theory, the outputs of its forestry products and timberlands outweighs any sort of housing development. And it blows my mind. I was just curious if we could talk about that for a little bit.
Yeah, so I mean that analysis or process really started. I mean, so Weyerhaeuser combined with Plum Creek back in 2016. I think the AVO process kind of comes from the Plum Creek side, but after the merger, we had a lot of those same folks that stayed on at the company and moved forward, and the team has really built up some robust internal analytics to essentially be able to look and screen all the value attributes of every acre that we own. So we've got a slide in our investor deck which sort of has several layers of different value attributes, and so for us it's real estate development, it's wind and solar, it's conservation and mitigation. We're starting to fold, we're starting to fold in carbon capture and storage and forest carbon offsets. And so at any given time, that team should be able to pull up a block of acreage or an acre and say, okay, what are the value attributes of this acre or block of acreage, and at what prices is that higher and better use a better option than the underlying timberland value? And some of our acreage with 11 million acres across the U.S., some of it's not super high quality timberlands, and so rather than just keeping it, let's monetize it one way or another. And that group, I don't know if you looked at our investor deck, but I mean, that group's been able to generate 50, 80, 100% plus premiums over the underlying timberland value in those HBU sales and in the work that the real estate and E&R team is doing on trying to capture value from every acre that we own, kind of in their annual operations. So that's kind of the genesis of it and where it is today. The team's really excited to be folding in these emerging markets of carbon capture and storage and forest carbon offsets, and it's just sort of an evergreen process that they undertake.
Thank you. Yeah, I imagine it's quite a data set.
Yep, I'm sure it is. I actually haven't seen it, but I'm sure it is.
So Andy, Cara, Evelyn, and Stefan, thank you so much for providing this great, opportunity for Weyerhaeuser presenting our work and learning from you. So I have a little bit different question. So, Polytechnic Corporation, right, in Spokane, yeah. So just curious, what's the uniqueness of your competition advantage relative to Polytechnic Corporation? Thank you.
Yeah, so I would say of the timber, so essentially Weyerhaeuser has three business segments, right? We've got timberlands, we've got our wood products business, and we've got real estate. Some of the peers that you showed on the slide, some of the peers that we get compared to are pure play timberlands companies, right? So that's primarily going to be Rayonier and Catchmark. And then some of the peers that we get compared to are wood products pure plays. So Boise Cascade, Louisiana Pacific, West Fraser, Canfor, Interfor, those types. Of all these companies, Potlatch looks most similar to us from a portfolio perspective. Now we're much larger from a acreage position, from a manufacturing perspective. But in terms of just sort of looking at the fundamentals of the portfolio, we have a very similar style of portfolio to Potlatch. I would say some things that probably set us apart from Potlatch. I mean, I think our Pacific Northwest timberlands is something that sets us apart. The export market that we have, that particularly to Japan and China, out of our Pacific Northwest acreage, we've got a much larger wood products footprint than Potlatch does. And so that's a big value driver for us. I would say those are probably the big two in terms of just portfolio differences, putting aside just the size and scale of the two companies.
Thank you.
Does anyone else have any follow-up questions? If not, I guess we'll just slowly wrap it up.
So do you guys share the list of companies that are in your fund, the 34 companies?
I don't think it's secretive. We could share it.
I'm just curious. Yeah, I'm just curious. And how many companies do you screen to get down to those 34?
So we kind of have a mixed approach. It's a top-down approach, and we sort of look at everything sector by sector. But normally our analysts have the freedom to look for opportunities and value within those sectors, unless we have some sort of plan and we assign them somewhere. We got 34 equities right now, but we're trying to slim it down. What we found is that with 34 equities, it's really hard, especially based on our head count, to perform a valuation and to reevaluate these equities every year. So we're trying to keep things diverse, but really look for long-term value and simplify our portfolio holdings. That's the current plan. Yeah.
Kind of adding on to the top-down approach. Yeah, we look at by sector. What in terms of macroeconomic trends, and then depending where we want to overweight more in that type of sector, we would dial down further into which industry will have like great growth in the years ahead. And from there, we assign analysts to look specifically in those industries and screen for companies in that aspect. But for us, from a risk management perspective, we typically look at large cap US companies. So those with a strong balance sheet, strong revenue growth, and also being profitable as well. So those are just some of the criteria that we look at.
Great. There's a lot of companies to invest in.
Well, the correction's been good, right? Everything was a little overvalued, and it made valuing equities really hard about a year ago. But now there's definitely more opportunity for us in our position.
Yeah.
We saw Meta.
You had to bring that up.
Experience for you guys. I've never seen a model like this, so I think it's pretty unique. You guys are very fortunate. And I'll just say from the Weyerhaeuser side, I mean, as you guys are doing these types of analyses in the future, I mean, we're always available to talk. We've got a policy in our IR group. We call everybody back within 24 hours of a phone call or an email. Doesn't matter if you're a small retail investor or our largest institutional holder. We're always available to talk to people about our company, about the macro fundamentals. Outside of a few weeks every quarter where we're kind of in our quiet period as we're preparing for earnings, we're pretty available to have discussions. So feel free to reach out to us. Either through Stefan or our investor hotline is on our website, and that'll come to me and Kara, and we can always give you guys a call back and talk about the company and the macro fundamentals that are associated with our business. So don't hesitate to reach out.
Well, that's a really great offer. We love our local companies, and we want to build these relationships between the fund and these various extremely important companies in these industries. Especially, it's great that it's just a bonus that they're local. So we really appreciate that attention to detail. And we future members will definitely probably take you up on that offer.
Great.
Cool. Well, I think that about wraps this up. Want to thank you, Stefan, for helping us. Is he still? Oh yeah, for helping us get this rolling. This is the first time we've gotten to do a presentation like this in probably 3 or 4 years. So really appreciate this opportunity.
Well, that's great to be on the other end today. So didn't have to do anything. Just got to watch. So glad that you guys could do it.
Yeah, we wish one day we could visit your office. When are you going back to office?
Right now it's April. Is the plan. So yeah, I almost was like, well, maybe we push it back 2 months and then we could have you guys in person, but but I think next time.
Thank you.
Great. Well, thank you all very much. We appreciate it. It was a great analysis. I enjoyed it. Just give us a call if you've got any follow-up questions. Best of luck as you continue to do your research.
Thank you so much for your time.
Thank you for your time.
Thank you all.
Yeah,
Thank you, guys.